Okay, in 5, 4, 3. Boom, we are live, ladies and gentlemen. Thank you for joining us today. Fun guest, friend I met along the way, focused on venture capital, innovative kind of AI background research and data analytics. We have Ari from Mindful Ventures. Ari, how are you doing today?
I'm doing well. Thank you for having me.
Had a lot of fun on our last calls, so I thought today would be fun just to go over kind of a wide-ranging area of topics. Obviously, we normally invest in the crypto video game sector, but I just appreciated your thoughts around a bunch of topics. So, do you want to introduce yourself and share a bit about your background?
For sure. So, hi, my name is Ari Qayumi, founder and GP of Mindful Venture Capital. So, we invest in early stage companies, normally pre-seed to about like Series A, Series B. All of the companies, the one thing that they have in common is the way that they're approaching their technology stack. They're actually creating a net new data set. And then in addition to that, the kind of impact that they're having on their user base is positive behavior change, which we go over with the founding team. But yeah, so prior to that, I led research at the Behavior Design Lab at Stanford. And then I also was investing with Royal Bank of Canada and did product there as well. And then after that, got poached by my boss, who is awesome, and went to Silicon Valley Data Capital. And that was also early stage venture capital fund focused on data monetization.
Awesome. So, you want to tell us a little bit about where Mindful Ventures is at and your focus, and I guess let's leave it your focus. It kind of covers most areas there.
Yeah, no, of course. So, it's funny because the journey of the storytelling, like something I actually realized early on is, in order to tell the story I want to tell, I actually have to first tell the story where we're at now. It's kind of like if you're a founder and, you realize that you get product market fit really fast, but that's not actually what you're doing. And you want to keep selling to this, but everyone understands it this way. I kind of experienced that early on. And so the place we start now in talking about what we do is we really, the breakthrough all comes from behavior design. And a lot of people mix up behavior design from behavioral design. So I was fascinated with how humans behave. I studied behavioral economics, behavioral neuroscience, behavioral anything following it, plus the neuroscience, plus the psychology, plus linguistics, yada, yada. But all of them are just partial solutions. So then what I discovered was behavior design, which is a system where it has methods and models. And so you have models for understanding how humans behave, and then methods for how do we actually, design new solutions to change behavior, and positively is what we do. So in the fund, kind of this approach, it's really around when a company is pitching us, they might not know that they're pitching it in terms of behaviors, but that's how my mind and the people that we've chosen for our team, that's how they break it down. They're looking at what behaviors is this company designing for, and when they're designing for that user base, are they actually going after the users who are ready to adopt this technology right now? And by doing that, we're able to identify which companies are actually going to accelerate technological growth and separate them from other companies that, perhaps are going after not necessarily the addressable market right now. And as a result, might not have as quickly of a growth pattern.
Do you want to share some examples of what some of these companies and these behaviors might look like? Maybe even give some examples that people would recognize right off the bat.
Yeah, I think the easiest one that we will use is around just donating to something, right? So if someone's really highly motivated to donate to the Red Cross, and they're making an okay salary, if someone asks them for $5, that's not so challenging, right? And so when they're prompted, and the ask would be the prompt, then the person's most likely going to donate. Awesome, great. Then, in another scenario, it would be, okay, they're highly motivated. They really want to donate to the Red Cross, but we ask for $5 million. Now, that's not so easy for everyone. And so as a result, you might not have as much of a traction rate there, or traction there. And so what we would be looking for would be companies in this scenario specifically. So, tailor it to whatever you're building, but it would be in this scenario, making sure that the company who is pitching us, when they talk about how they're going after these users, they're saying, look, we know that these users are highly motivated. We know that this is really easy for them to do. And we're starting there. We're making sure we're going after these people. Then second, they say, we're also going to go after people who are highly motivated. And here's what we found is really hard for them to do. And we're going to now make it easier with our technological solution. So those are kind of the first two layers of what we do when we're identifying companies and working with founders.
Awesome. The Bear family will know we're huge fans of Kiva for this reason. It's kind of this unique way to loan to entrepreneurs as well. It incentivizes, as an entrepreneur, already positive behavior.
Absolutely.
So what are some of the best examples you've seen to date of this kind of behavioral changes within applications? In our conversations, we've talked about ice baths and all these other abstractions of what technology and mindfulness can do. Do you want to share some of like the highlights that people like myself wouldn't necessarily know of yet?
Sure. So actually you brought up something I did also want to answer toward, which was around the mindfulness thing. So a lot of people misunderstand mindful venture capital for being that we just invest in mindfulness-based companies. And the reality is that's actually only one vertical. Because if you think about it, mindfulness-based companies, what are they trying to do? They're trying to change behavior towards, normally facilitating more mindfulness in some capacity. And we're backing companies that, they do that, but they also facilitate other kinds of behavior change. So I guess the main difference there would be we actually want to look at how so if you're going after a mindfulness-based company, let's say, it's not just about like how how do they do their product market fit? It matters how they're doing the business model over time. Because if you have a company that's saying, we want to help our users achieve, I don't know, a lower cortisol level, let's say hypothetically. Okay, that's great. But how do you also know that your monetization model is not actually keeping them on the platform longer than their optimal period of whatever they should, the behavior they're engaging with their platform? So we would be looking at a monetization model that is making sure it's facilitating the interaction of the user with the platform to facilitate an optimal like behavior change, in this case, mindfulness.
Sorry, I was muted there for a second. I had to scroll over.
Okay. Yeah. Okay.
So one of the things here that I was kind of interested in is Uber considered like a mindfulness? Because Gary Vee brought this up, is saving time for people mindfulness in like a tech stack? How do you view some of these? Again, we're big into crypto, so I'm interested to hear about the crossover of this mindfulness and the way people are, whether it's buying or spending time on applications.
Got it. Okay, great. So with the question to Uber, it would be, so no, technically they're not. They're definitely attempting to be, and it's not just mindfulness, it's more like the mindful technology stack, if you will. So a lot of it is around how they're collecting data and then how they're repurposing that to surface for the users. So if they're actually like the part where they switched over to Uber Eats, that actually is showing, look, they used data from one of their data sets to say, okay, here's now something else we can do with our users. We generally know where they're eating, things like that, and they can do geolocation targeting. So in that case, that would be a mindful technology design where they're already doing all this work. And instead of going and creating more data, like more net new data sets, they're leveraging the data that they have to yield insights to help their current user base change their behavior in the way that they want, which is not always just getting a ride somewhere. Sometimes it's actually having the ride come to them and giving them food.
So the last time we chatted, we talked about kind of the misnomer of the term artificial intelligence and how you're dealing with largely pre-programmed behaviors and technology. So it can really only do what we tell it to do, even though it's complex and it can figure out all these highly definitive things, like it can translate languages on the fly. It's still using a set package. What type of data points are you using to identify these early companies? Yeah.
So no, that's a good point. I think that when we were talking the first time, I'm trying to remember exactly what it was, but I probably was calling out that when people are when founders are pitching me, or just in general, when I'm talking to students, they'll be like, oh yeah, I'm like so excited about AI. Oh, I'm so excited about machine learning. And I just ask them, oh, well, what does intelligence mean to you? Like, how do you identify intelligence? And it often catches them off guard because they've been so slammed with, only thinking about the math side of it, that they've forgotten about the math is a way of representing what we see in the world. And, we can do that, and that's exciting. And part of why that's advantageous is we can then put that into a computer. Go ahead. Sorry, I saw you on mute.
We've reversed engineered the universe to learn things. Now we haven't come up with our own standard of understanding. It's really more about the basis of the world that we live in. We were talking about maybe some of the dangers of artificial intelligence going into behavioral structures of like within social media. We've seen these weird campaigns come out where it's clear that you're only getting one side of an argument quite often. So we went down a little bit of a rabbit hole with that AI thought. But what type of data points are you able to input and take a look at? Obviously, first comes to mind like revenue, team. What are the most successful points when you're looking at these founders in these companies?
Yeah, so I think the one that's normally most shocking to people is it's actually how they design their proof of concept. So if I ask them, okay, well, I literally will ask them, how did you design your proof of concept? What is your proof of concept? Who are your target market for it? How did you price it? And then how many clients do you have in the pipeline? That's kind of a normal series for us. And I don't see other VCs normally asking that. They normally go straight to kind of, revenue. What's your spend on engineers versus on the marketing versus on DevOps? So we look at all of that too, but we found that all of that isn't necessarily as relevant as if you just look at how an experiment is designed. You can see very quickly the judgment decision-making models of the founders and how they look at, time to lift, essentially.
I guess what's fun here too is for me, I never intended to be in venture capital. I ended up here by a series of events of just liking interesting things. And we have some commonality in this particular niche. But what's your broad spectrum take on venture capital in 2022? Because there's some wild stories out there.
Yeah, no, I think that's a great question. I think for a lot of generations, this is going to be their first downturn, their first recession. It's hard for everyone. To be honest, I'm kind of excited because in these moments, you have people who do come together and build the most awesome companies, because only the truly resilient founders and teams, because you can't just do this alone. This is very much like an M&A environment where the companies that will succeed are the companies that identify, hey, here's exactly what is our value prop, and we're only going to double down on that. And everything else, given they have cash, we're going to buy these things, or we're just not going to service it anymore. So I think, I'm seeing teams who do that, who are being really intentional with hitting their milestones and targeting one or two extra customers. They're outperforming. And then also focusing on retention instead of just conversion and engagement. That's really helping a lot of founders get term sheets.
Yeah. Here's this one kind of stunned me last time. What was your thoughts on Adam Newman raising a whole nother round? He was the guy from WeWork, correct?
Yeah. So, it's funny. I always have to withhold myself from commenting on things publicly, given information we have. I mean, I wasn't shocked by it, to be honest. I think that given the thesis and approach and the assets and the way that A16Z is diversified, right? Their network, how they have their assets allocated, it totally made sense. And I think again, there's a whole other side of this that I could comment on too. If you want me to, you can double click on it. But I think the other part of this is sometimes we forget in these short cycles that venture capital is about solving really hard problems. And sometimes founders do actually fail. And then, normally I would say it's in the space of quantum, we see kind of companies will fail maybe 3 times and then suddenly they're converging. And it's wow, we didn't, because it's not they're really failing. They're actually learning kind of thing. And then suddenly it's that breakthrough. So I get that side of it. And obviously there's another side where it's a little disappointing, but you do have institutional investors who are backing them. You have to make sure you're making returns. It's not our approach, but that's what they chose to do. So.
Yeah, fair. We've made a few investments where we're we don't even know if this one's going to be successful, but we like these people and they're going to probably do something in the next few tries that we're excited about. Great take. So tell us whereabouts you are. You were just closing up, or you're in the process of closing up fundraising for Mindful Ventures?
Yes. Yeah. So we have our final close at the end of the year, technically. And so we'll probably see through that. And, we did a really small friends and family round, very early on in the year. We invested in a few companies, and then we won term sheets for the other companies that we'll deploy to. And it's been kind of crazy. We got featured in Davos and I got to talk about some of the work we're doing. And then I was heads down, really working with our companies, making sure that they leveled up their status, and they're doing great. They're outperforming the market, even in a recession, which is I'm grateful, and hopefully they continue to do that. But yeah, now a lot of it is really heads down relationship management, making sure that we're having the right LPs backing us, and that, I think that the brand is aligned with, again, like I said before, the mindfulness thing that didn't occur to me when we started the fund. And so I think being more intentional about, hey, everyone, we do computing technology and behavior design. I'm gonna, be a little more, I guess, agile on that now.
Right. It's not all ice baths and ayahuasca ceremonies.
Yeah. Yeah.
Um, Tell us a little bit about the team. You've got a great team and some advisors that you work with as well.
Oh yeah, they're great. So actually the entire team are composed of former mentors and people I've worked with over the last decade. The one that has been a really close partner of mine is Laura Durian. So she actually literally found me at Stanford and was like, wow, you're really great. And she kind of followed me. She was acted like a mentor and then poached me from Stanford, right? And she's been a tremendous guide to me in industry. It's really hard to find leading women in venture capital. You'll see that a lot of women cut down other women, and she's someone who hasn't done that. So I think that's really special. Then we also have Tana Drapkin, who is the lab manager at Stanford. I've worked with her also last decade. And then the other three, so Ray Wong is just, such a star. He's a top enterprise, or he is the top enterprise tech analyst for, I think, almost 20 years now. And just, it's one of those things, it kind of comes through on the Zoom, but when you meet him in person, he's just a larger than life personality of like, hey, everyone, right? And I think it goes to everyone on our team, but he really is, you can see the glimmer in his eye. So that's been really special, the global markets perspective through the tech, the tech 100% drop. It's been fun to talk to him privately about that. And then we have Mitesh Parikh. He's a former venture capitalist, early stage, ran a fund and then retired very early. Came out of retirement because, he found me and was like, wow, you're great. I love your mission. And something that's really special about him is all of his carry is actually going to his foundation, which backs minority founders. And a lot of them end up being women. And so that's an initiative we really care about, is microfinance. And so he's heading that. And then, yeah, I think last, but totally not least, like maybe even, my partner in crime on the academic behavior side is BJ Fogg, really larger than life personality as well. Really loves teaching, loves giving back, uses, everything he's ever learned to serve and further society. And so all these people, they just lift me up. And I think they lift up our founders too. They're really good leaders, and they lead by example.
Oh yeah, that's so important. Just in general, I finished reading Joe Dispenza's Becoming Supernatural. I'm not sure if you've ever read have you read any of Joe's work, Ari?
Yeah,
okay.
yeah, just like excerpts from Supernatural for sure. We would definitely reference it, behavior work.
It just seems to make so much sense. What you want to do is inspire and like get people excited, even though it's difficult. Life is always difficult. You're best off kind of when you're viewing everything from this loving, excited standpoint. It's just like, to get people to operate the best. You don't want to put them in you don't want to put them through too much garbage. You want to try to inspire them each step of the way. So having all these intelligently sociable people is so important. It's one of the things I discovered early on talking to David Hornick. He was like, one of the things I like the most about this is my job is to basically meet as many interesting people as possible. He's like, how much funner a job could you get, essentially? What do you feel some of like the secret sauce or the unknown aspects of being successful, not just in venture, but maybe in any business that a lot of people overlook?
Oh, I think you muted.
Oh, yeah, sorry. Yeah. What do you think, like, a lot of people overlook in business, and like what's that sweet spot or sauce that you use to be more successful? Yeah. Kind of a weird question.
Yeah, no, it's totally fine. Well, I think kind of what you talked about, the energy thing. Someone named Roy P. at Stanford gave me a really, really good advice a few years ago, and I had stopped doing it for a while, but he was like, Ari, you should, really, I recommend keeping an energy journal. And whenever you're having these meetings with people, just write down, how do you feel after? Do you feel rejuvenated? Do you feel inspired? Do you feel kind of like, oh man, that's not great, And then also track, what do you actually behaviorally do? And where do your thoughts go? Did you actually like do the list you were planning to do that day, or did you kind of get distracted? And so that's one, I guess, habit or routine that I do that's very helpful. It's like after a call, I will write. That's kind of the tiny habits method is after I blah, I will blah. And so I do that. Yeah, with writing down my energy levels. Yeah. And I think also the other thing is, I think a lot of people hold on to relationship, or like not just it's like they think that when you stop a relationship, it's like stopping it. But life goes on and you continue to converse. And just because you paused a conversation, it doesn't mean that that relationship is done. And so I think having that mindset of, hey, we're in a conversation and we'll pick it back up, when timing aligns, it's a much more positive way to look at life. And that way, people don't take things as personally. It's like, oh, okay, well, timing isn't aligned. And then, let's talk later.
Right. When someone, like, if you message someone and they don't respond back, you're like, oh, these people are just ignoring me. Like, instead of, no, they're busy. They have their own life. There's something's going on with a family member. There's 1,000 other things on the top of their to-do list. How do we approach things and not take them too personally either? Like, recognizing other people's, I guess, intentions. Here's one question I always like to ask people. What's one area that you have a lot of conviction where at least at the moment, the good majority of people disagree with you? We had talked about the Alzheimer's data. We had talked about a few other things kind of in this area, like how do we suss through John Ioannidis's format, which is like, if we think half of the scientific data is fake, how do we suss through and find that? Like, what's that one thing that you have most conviction where, again, the masses are disagreeing with you?
So I would say, and it's actually even part of why I got into tech, which is hilarious, but it's like clinical trials took a very long time, and doing like fMRI and things like that. And so I was like, okay, that's 10 years. I'm good, pass. Let's figure out a way to do this, least invasively. But I do think that and we've proven that, right, with our little playbook. It's like you can do clinical trials and do them in like, it's kind of a tiny habits approach. We don't have a name for it yet, but I definitely use the different methods and models BJ's taught me and other ones we've created together to create these like bite-sized trials that help us test, are we actually facilitating the kind of behavior change the technology is intending to? And I think that's something a lot of people disagree with me about. They're like, no, we have to spend all this money to produce this kind of drug, or just things like that, where it's like, well, actually, if you're a little more intentional or more mindful up front, and you kind of choose, if you're more accurate before you're precise, that ends up yielding quite a lot of return. And you don't need massive teams to do that. You just need to be in the right area first.
Yeah, this reminds me of kind of the troubles of RCTs compared to just like good old observational conclusions. Like, I could take mushrooms and I could tell you that it's going to have benefits to some degree or another. And it'll affect people with a wide degree, but nonetheless, like, you don't need a bunch of data necessarily. You have one practitioner. And that's what I find interesting about people like Joe Dispenza and Wim Hof, is like they're clearly practitioners, and they're basing it all off just simple observational data. It's like, whereas these big companies get away with using randomized controlled trials, the enormous amount of expenses to prove that specific potential detail that most people would probably never be able to decipher because they're not good at statistics. They could lie with visual variabilities like they did with the Alzheimer's stuff. One of the thoughts that I wanted to go into, I guess, just around this is how do you decipher early if those are being done? You said or maybe I'll ask it this way: what's your thoughts about this new company, Love, as well? Did you see that one?
Interesting. I did.
Okay. Because they're doing something kind of similar, correct?
Kind of. Man, you really caught me off guard on that one. Look at you, Tiho.
Excuse me.
Am I allowed to decline commenting on things publicly?
Okay, yes. Okay, yes. We'll save that one off the table. So for those of you who don't know, you could go look up Love on the internet and do
yeah. So we can do that next time. You can
okay.
Next time.
Okay, well, fair. That's a bit more of a data question, I guess, to some degree. So for next one, well, what are the next kind of waves that people should be looking for? Like, where do you see the best integration of this? Like, things like TikTok don't seem very positive to me. How do you make stuff like that better?
Yeah, that's well, I mean, first and foremost on the TikTok one, it's security related, right? And I think also just looking at what is being offered on TikTok in the US versus China. It's interesting that I don't know, maybe this is just my experience, but a lot of our students, they used to want to be scientists or doctors or lawyers, or president when they're kids. And if you ask them now, I mean, try it with your siblings or cousins, they'll say, I want to be an influencer.
Yeah, YouTuber, that's what they want. TikTok.
Yeah. They say I want to be influencer. And that's like, interesting. Okay. And if you look in China, how they're actually using TikTok, it's to educate the population. It's not actually to, do more influencing things like entertainment, which I thought was rather unique because we don't talk about that a lot. So I think a lot of it is actually having more integration between people who are experts in behavior change and policy, and like more of a council instead of right now. I think a lot of these, what would I say, these terms and the way that we govern the companies, it comes out of maybe 5-10 people, right? So you have like a few minds who are selecting what is actually going to happen. And it would be nice if that was a larger conversation. But perhaps I'm wrong there. Perhaps having too many cooks in the kitchen would create even more problems,
Yeah, with some of that stuff, it's hard to tell because you usually have a
I don't know if I can
visionary.
hear you.
Oh, check 1 2 1 2. Can you hear me still, Ari? Yes.
Oh
Yeah.
yeah, I can hear you. We're good.
Okay.
Yeah.
Okay. Yeah, that the management one is always a hard question. I read recently the Power Law, and I loved the story of the guy finding the Atari investment, how they were all like weed smoking hippies in a garage, and that no one would invest in them. It's like sometimes what you're looking for is these far out abstract people that don't actually fit the bill, that don't have the qualifications. You're looking for that random thing that almost doesn't fit, more so than the thing that does. It's hard to calculate, I guess, that who those people are sometimes. Well, here's another up. I feel that with this idea, a lot of the time, some of the things that people get wrong, and what I like about Web3 is it's so focused on community. How long do you think it takes until Web2 catches up with Web3 and people go from being monthly active users to monthly active like community?
Interesting. Okay. So, how would you define the difference between monthly active users and monthly active community? Like, meaning instead of they're just on the application, they're actually on like a chat with the application?
Well, part of me sensed that it was the founders and the company's ability to view the people that are using their product not as a user but as a community member, and that alone kind of changes the dialogue between you and the consumer. Effectively, like, oh, this is actually someone who's a part of the product and the company, like early adopters of CryptoPunks. Like, you see these free ideas, but you have like an identity almost related to the product that you're using. You see it with other things like Monster Energy drink. You see it with certain products where people attach their identity to the product more so as well. But yeah. Okay, well, here's another way to ask the question. Do you feel that we are obfuscating the relationship between people on the platforms by calling them users as in comparison to calling them community members?
Yeah, great. I think that's kind of what I wanted to know if you were asking me. So yes, I do. And I think that, and this is where, like, I don't want to sound like I'm a lovey-dovey happy person. The reality is it's in the numbers too. So when we treat our users as just an individual user, the behavior change cycle, you're going to end up focusing on mostly conversion rates and engagement, like not even too much engagement rates, because all you want is to get them on the platform. You don't really care about where they go and do they evolve with you over time. And what we found, though, is when you do focus on community and when you facilitate that, you don't treat them just as users, but each user, you think of them as they want to be a part of certain communities. So maybe they're just part of one of yours, but that probably means, you can look and see if, hey, that probably means they're part of these other ones too, even if I'm not owning those companies. That's really valuable because any kind of change that's happening here, they're having a sustainable system to kind of keep them in check. Think about like family, right? And I know like a lot of in the crypto space, we're all kind of alternative people, and that's great. But at the end of the day, it's also like you form your own community and they hold you accountable, right? You like say things, they call your BS. And that is how we've developed as societies, right? And so I think the community approach is much more effective. And you end up seeing the numbers show an engagement. So engagement goes further up. The part where I'm way more excited is when we start to field into this, how I was talking about, you could be in this community and then there could be these other ones over here. It would be great to have a world where it's that ecosystem, because I could be joined in this community, but also in these other two. And as a result, whenever maybe I'm kind of bored here because it's Q1 and like Q1, I'm not doing too much there, but Q3 and Q4, I'm like, I'm over here, something like that, right? I think that's a way better approach that a company will take that for me as a user and design that kind of behavior sequence approach of value prop, because then you give me these communities that I can kind of hop between and it will help me stay engaged on the platform. And so it will convert me, it'll engage me. And then, beyond that, it'll retain me as I change, right? Like I'm not the same person I was at 12. I'm not the same person I was even like 6 months ago. A lot has changed. And so companies that are able to facilitate these community evolutions with the users and treating them as community members, I think those are the companies right now we're seeing are succeeding as well.
Yeah, this is one of the parts I always try to bring up too, is just kind of a lot of people have been regulated away from being closer participants to the early days. It's one of the things I don't like about early venture, is that they'll take a company and they'll run it up to these extraordinary valuations, and the first chance the public gets, or like the only chance the public gets to it, is after everyone else has made huge sums of money, and the upside is very limited in comparison. So most people just don't get to participate, but they're usually the people that are playing the Fortnite first, or on the Instagram or on Facebook early. They're the people who are early adopters of the technology, but that don't have the financial or regulatory backing to make like a $12 investment. You brought up microfinancing being like one of the things you're interested in. Have you guys, I mean, and crypto kind of is in this area too, but are you seeing any microfinancing or any changes in the laws that allows, like, I know AngelList does stuff like this, but what's your thoughts on how more people can participate early in the products and companies that they are effectively helping grow?
Oh man, I feel like that's like one of those lists I'll send you after and you can share it with the community. We have a lot actually, and it's for different stages and different risk tolerances. So yeah, I'm trying to think how I want to answer this. I think the most important part is actually to get education first, because a lot of people say that they're like, oh, do your own research. But like for instance, I know you offer this community where people can actually learn about how are you thinking about the investments you're making, and having them go through that experience with you, and then also start to make their own bets even without money. I think that's actually the best way to start, is really, helping these people develop their own approach to investment. And then, yeah, I think the other part is there are angel list syndicates, but at the end of the day, like there's still, a syndicate still does take a management fee. And so ideally it would be, you're backing people that you really trust. And so you should know someone personally, is kind of how I would take the approach. And the reason why is like, otherwise you're kind of just shifting all the time. Like you're putting seeds everywhere so you can extract optimal value off of one, and then you just cut the rest. And so instead of taking that approach, I would actually take an approach of, okay, here are the people who are backing me. Let's double down on that, and then continue to like learn in a space. So I don't know if that answers the question. I think it cut out for a second.
Oh yeah, no, it did. Sorry. I think that was my internet. I apologize. I'm just making sure everything is back online. The jungle at this time of year, Ari,
totally fine. I get it. It's like tsunami or monsoon season.
Yes, exactly. This is I'm normally like on my way to Asia at this time of year, but I've been a bit more patient with being in one place. Okay, just let me check. Okay, it is still working. Good. I apologize for that. Yeah, part of my interest here too is how do you expedite behavior in people, right? We know that even subtle changes sometimes can make such a big difference. Like if calling someone a community member versus a user changes the relationship between those two so dynamically that you get a much better result. Because a lot of the times people they get no positive net result of a lot of the companies that they help build and make as valuable as they are. They just are viewed as the product, like you're the thing we sell stuff to, so that's one of the parts of technology I'm always interested in, like who's out there leading those pitch decks and trying to change that relationship between both parties. Yeah. So well, some of the last questions we'll go off with is just a bit more broad spectrum. What's some of the, I've talked about what I think about negative aspects of venture capital, running prices up before anyone else can participate. What's some of the downsides to venture capital that I would normally think about?
Yeah, no, I think that's a great question. And also just on the last one, I think I am excited about the space you talked about, and I'll look forward to answering next year. We have some stuff in stealth that's really exciting, and it will open up some markets for all parties in a safe way. So I think that's kind of why I'm like holding back a bit on that answer.
Oh, awesome. Yeah. Paul Stamets just did one with he just did some huge study through an app for medicinal mushrooms. I was really impressed by the data that they're able to gather there. Yeah, it's pretty profound data.
But yeah, oh wait, you muted again.
So, what are some of the downside negative aspects of venture?
Perfect. Yeah, so I think some of the downsides are, in my view, again, all of this, my point of view, is the current incentive model is very odd to me. So, a lot of people, we see them, okay, downsides right now. You have certain people who outperformed in markets that don't really currently exist yet, because they already succeeded. And a lot of people think that all of their companies succeeded in one portfolio. It's like, no, they had one company that returned their whole portfolio, which is great. Go them. Awesome. But now it's like, okay, you're like, a lot of family offices are just re-upping with institutional investors that they've had money with before, because they're like, oh, well, we know that we won't lose anything. And I think that's a huge downside, because you do have specialized managers emerging, and these other people who, they haven't been tracking market. They don't really need to, right? They get all this deal flow, but as a result, they kind of get deal flow from, people who care about that status symbol. And as a result, if you think about it, the companies that have been extremely successful are companies that don't care about that. They're normally founding teams who really care about having a positive impact in some way. And they normally start as projects in university. So I think one of the downsides right now is there's not this pipeline supporting university students going into venture, and not just giving them money and be like, run free, kiddo, actually giving them money to learn, how do we actually approach this in a de-risked way. There's a few classes we have at Stanford that are fantastic. I'm like, everyone should take it. It teaches you to go from proof of concept to product in 10 weeks. It's like, cool. People should be able to do that. Right. So I think having more funding for these systems that facilitate founders to build these companies in a more de-risked way is something I'm seeing as a downside. And part of it is that, a lot of VCs aren't actually prior founders, which is a little scary, right? A lot of them are financiers. You have a lot of investment bankers coming in, et cetera, which is fine. Like, they're great and we need them. At the same time, I think you need to have a team approach where you have different skill sets making the decisions.
Right. Yeah. It almost feels like how Kodak missed the digital camera. At one point, they became too compartmentalized, and they forgot what the mission was, because there weren't enough people in the same thing happened to Merck actually as well. Merck was amazing when they were owned by the original founders, and then after that, they've been just nothing but basically horrible. The original founders were awesome. They gave patents away, they gave drugs away for free. They were great. But once you lost that kind of early mission, or I guess how you would point it, the relationship between what it takes to be a founder, have this unique vision, and the trials and errors it takes to go through that, versus someone who's just like, oh, who's the revenue? Like, do you have a tie on? People that don't know how to recognize success early, even necessarily. So they shun that thing. And it actually also reminded me of another article I read the other day. It says, if you're so smart, why aren't you rich? It was MIT looking at how they should invest in scientists. And they're like, okay, well, the Pareto principle seems to still invest. So and also what you're talking about is bigger funds that you get away with, okay, well, if we make 10 investments, one investment is going to kick. One investment or two going to kick is going to cover all of those. And you could be successful basically as long as you can keep making 10 more investments. It's actually maybe not that difficult of a numbers game to play. So they get away with playing these larger numbers games where they're not as effective, because they don't know how to find that relationship with these early entrepreneurs. Okay, so I just want to make sure I understood what you're saying. So the next part, I'll just kind of leave open to you. Where do we go from here? How do people make the most out of some of this information? The reason why I like sharing ventures, because most people don't know about it, and even understanding that you can invest on AngelList, or that these things even exist, I think is a huge upside. About where should people go? What should they do? How should we follow you? All that fun stuff.
Oh, yeah. Wow, that's so nice. Thank you. Well, so I recently started using Twitter. We'll see what happens to my mental health as I do that. But
I've got some tricks I can share.
Yeah, I mean, please do. I'm open to coaching from the entire community. I honestly feel like it is not a healthy engagement, but Ray is amazing. So please do follow Ray as well. And then I think I'll probably post on LinkedIn. Normally I blog and stuff, but I'm just really focused on relationships right now. So I'll share our theses, et cetera. If anyone's interested in doing a Zoom type call at some point, we've had a lot of requests for, hey, Ari, can you talk about how you went through your financial independence journey? I'm happy to include that link to your community as well. We'll probably do that for some Stanford athletes at some point. But yeah, I mean, I think right now the best thing to do is make sure that you're backing people who are really creating change, and also making sure to like for these larger companies, making sure that they're not so focused on, just doing anything they can do, and instead making sure that they're focusing on, okay, what is our actual value prop of this company? What are the things that we aren't the best at? And hello? Oh, okay. I think I'm live by myself. Not really sure. This is interesting. Never had this happen. I also have no idea if people are watching this because I'm on Zoom. Interesting. Okay, maybe I can go to the Zoom or the YouTube thing and then see if anyone is having questions right now. Oh, cool. I'm on YouTube now and I can see. Okay, maybe I can go to the Zoom or the YouTube thing to mute myself. Okay, I've now muted myself. Cool. All right, I'm going to look at comments now. Hello from UK. Hello. Nice to meet you, John James. All right, what else do we have here? AI is the future. Ola from Spain. Universe rejoices happiness. Great interview. Oh, Twitter name is Ari Qayumi, ARIQAYUMI. What will we do? No electric. How do we get by? That's fair. Actually, I didn't really talk about anything with regard to like the electric grid. But yeah, I think something that's pretty interesting is doing dynamic pricing with electricity, and also looking at which companies actually have like better access to chips than others. I'm trying to remember there's a company called Mist I thought was very interesting. They were too large for us at the time, but really cool what they're doing. We don't know how people sit there, look brain dead, waiting for a like on. Oh, that's funny. Okay. Yeah, thanks. Thanks so much. I'm trying, all in a good day. Computer is a drug. So yes and no. Actually, I'll comment on that a little bit. It's funny to me because, like everyone talks about technology, and I think they're forgetting the fact that technology is a tool and it's supposed to like actually advance us as a human, whatever, human species, human progress, accelerate progress. But so at the end of the day, what matters is, what do we want? Like being aware of what we want. What kind of change do we want? Like you can use a screwdriver. Hey, you're back.
Yes. Hey.
I was just freestyling for you.
Oh, good. I appreciate that so much. You're fantastic. It's your show now, Ari. Everyone, welcome to the Ari Show. She's taken over. Well, thank you for that. I actually had to quickly switch to like my Wi-Fi. I'm not. Yeah, totally. The jungle between this time of year and January is just a little bit tricky. So you got to tell everyone your Twitter. I'll make sure I grab all that data. It will be down in the links below. Anything I missed?
I was just looking at the comments and responding. I mentioned you had a sex change. Wow, that's aggressive. Yeah. Yeah, I talked about electricity at the grid very quickly, and then I was just talking about technology as a tool. And I think sometimes people forget that it's supposed to help us facilitate behavior change.
Yeah, it's really easy to get lost into it. They've turned it into a drug of some kind, where these dopamine hits. I think that the movie The Social Network did a great job kind of analyzing that about Facebook. Geez, look at this. All right, today is just one of those like tech jungle days. Just give me 1 second and then we'll
totally fine. It's totally fine. I had the same thing happen before with Ray. It was so embarrassing. But I can't hear you, but I see your lips moving on the YouTube thing.
One of the positive things about being a founder is you just kind of got to roll with the punches.
Yeah, you got to adapt. Yeah, you got this. It's all good.
Yeah, that's how it works. Well, I had a great time chatting with you today. I'm sorry I dropped out there at the end. If there's anything else you want to go over, let me know. I'd love to have another conversation again in the future. So we'll keep chatting. I want to stay up to date with everything that you guys are doing. Again, all the audience will be down below. Ladies and gentlemen, if you made it through the whole hour conversation, I appreciate you. Leave your thoughts, your comments down below there as well. Make sure you follow Ari on Twitter. Check out her LinkedIn. I really like the work that you're doing. I think you're brilliant. And I had a really great time chatting today. So thank you, Ari.
Thanks for having me. Yes, looking forward. All
It was
right.
a pleasure.
Ciao.
Bear family. Thank you.